No one else is talking about this, but I'm here to tell you that the decision by the judge in the Ripple case is already been made. It has already been made. It was probably made 6 months ago. The US government is not allowing it to be made public.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. He believes that we could possibly see Bitcoin's low in the coming months. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed.
ADP added 296,000 jobs. That is a higher number than expected. The increase in hiring was much larger than expected. Economists polled for Wall Street at the Wall Street Journal had forecast a gain of 133,000. So 133,000 is what it was expected. 296,000 came in. Now let's analyze this. So what the heck does this mean? Well, number one, it means that the job hiring was stronger than expected. It takes pressure off the Fed about worrying about, do they need to stop hiking? Now that brings us to the next big informational piece. Today we have the FOMC policy rate decision. There's no doubt the market is pricing in a 25 basis point hike. The question is going to be, with what's going on in the regional banks, do they decide to pause after this? Now the ADP number generally is telling us that they don't have to, at least on that data point, but the regional bank collapses are telling us a different story. All right, so again, when we go to charts and we look at, we know FRC, right? So FRC was taken over. If we look at the chart here, just absolutely crushed and annihilated here. And again, you can even see it's not really showing up the real chart anymore. But the bottom line is that was taken over by the FDIC. It was auctioned off to JP Morgan. By the way, JP Morgan wasn't supposed to be able to buy any more deposits or have any more banks under their wing because they are a certain size, but the government gave them special dispensation. The issue that I'm concerned about is you're just making these bigger banks bigger and even more too big to fail. And that's problematic, right? It's essentially not diversifying. The idea of having so many regional banks was that you diversify out in the US economy, the banking system. The more banks that get overall taken over by big banks, the less diversified you are. It means that when you have another 2008 scenario where you have this financial crisis, it's even worse because there are big banks, the government can't fail, and guess what? That means our tax dollars go to bail them out more and more. We did it in 2008, 2009. If and when, and notice that again, it's not really an if, it's going to happen. The question is when. Whenever it does happen, it's going to be even more money that needs to be printed or taken in terms of tax dollars to pay for the bailout. All right. Anyways, going back to the banking crisis, PACW, PacWest, yesterday collapsed as much as 45% during trading hours. It did recover a little bit off of the lows, but again, we all were told that, okay, FRC, once it's done, JP Morgan took it over, this will calm the banking crisis. That did not happen. Clearly yesterday we saw the KRE down 6 to 7%. The KBE got slammed, which is the ETF that tracks the banks. We saw some major drops here. All right, so what does this mean? Well, it means that the Fed has to be very aware of what's going on in the regional banks. To me, this tells me that yes, they're going to hike today because they choreographed and told us they were going to, but I'm in the camp and the markets are confirming this based on the future Fed funds analysis that they'll likely pause after this hike. Now, the question to me is, how does the market take this? If the Fed comes out and says, we're going to pause, does the market rally to the upside? I think initially that could be the result. So if the Fed does choreograph and tell us they're going to pause hikes after today in today's press conference, and remember, the announcement's at 2 o'clock. There's a press conference at 2:30 p.m. Eastern time where Jerome Powell will answer questions. If he says something like we're looking to pause to see how things go, I do think the initial reaction of the market will be to the upside. In fact, there was a big options trade that went off yesterday, millions of dollars basically expiring at the end of this week, and that was basically on the long side of the S&P 500, telling us that smart or big money is telling us the market may pop initially. The other caveat to this, I would say this, is don't think this is a new bull market. All right. Essentially, what we're in this position of is that The markets could react positively to this announcement because the Fed is finally pausing, but then the markets are going to look back and say, wait a minute, if the Fed is pausing, are they going to drop rates? The answer is no. Inflation is too sky high, and you're ultimately going to look for the markets to reverse. And I have it priced in that we see a 20% drop in the S&P, guys, by year end from here. 20% downside on the S&P. I'm a trader. I'm going to be long and short many times over, but net, my bias, there's no doubt, is to the short side of the S&P and the NASDAQ. And by the way, let's just get into this right now. All right, so we have this scenario where you're seeing crypto run like Pepe and Gensler and all these other things. That is pure speculation and gambling. That is not a sign of a bottom. That is a scary sign that the markets, again, are telling you that investors are taking way too much risk. And when that happens, look back at Dogecoin and SHIB back in 2021. It was nearer the end of the move in crypto versus the beginning. Nearer the end of the move in the stock market versus the beginning. So just be aware that the market, again, is sending us signals via psychology, via charts, that we are on the verge of a bigger move down, even if we get a small pop on the FOMC policy statement today. All right, so that's covering the FOMC today. All right. The other thing I want to just point out here as we kind of come to the end, we're going to go to Bitcoin, we're going to talk crypto. But the bottom line is, and no one else is talking about this, but I'm here to tell you that the decision by the judge in the Ripple case is already been made. It has already been made. It was probably made 6 months ago. The U.S. government is not allowing it to be made public. The U.S. government is not giving any clarity on regulation to Coinbase. That's why Coinbase is suing the SEC and threatening to leave the country. Why is the government doing this? The answer is this. The government is doing it for the same reason China did it. All right, now you might be saying, what the heck, China? China's doing the same thing? And the answer is this. Remember back when China basically banned Bitcoin? Why did they do that? Because they were launching their CBDC, the digital yuan. They wanted the digital yuan to get a foothold in transactions and be the king, be the top player in the CBDC, in the digital currency realm. Now that the digital yuan is being used actually as a reserve currency in trading, but with some of China's partners, they're now opening the doors to Bitcoin again. China's smart, all right? Whether you agree with them or not, they're smart. They understood that they had to make sure that the CBDC, the digital yuan, had the foothold. The US government is essentially taking almost the same play structure and essentially saying, okay, we're not going to ban Bitcoin, but we're going to keep things so fuzzy in crypto until we launch our CBDC, so that our CBDC will be used by big institutions and ultimately be used by the masses over a lot of these other digital currencies. That's the game plan right now. I'm going to tell you straight up, this show is called The Game Plan. That is what's going on. Once we get the CBDC to be launched, I guarantee you that within a week, a month, you will have regulation on crypto unveiled. The Ripple decision will come out, all that stuff. By the way, let's just get finally into the charts here. If we look at the Bitcoin chart very clearly here, you're in a range, 30,500, which, by the way, I told you guys for the last month, for the last 2 months, we could get up there. That's your max upside in the near term. That's exactly where we got to over here. We pulled back to the low support of 27,000. We went up. Now we're hovering here. Which way breaks? That's what I'm watching. As a technician, it's which line breaks. Do we break to the downside? Do we break to the upside? Whichever way we break, that's the way we're going to continue in the near term. A break of 27,000 sends us to 25,000. All right, a break of 30,500. There's this upsloping trend line right here. We would go attack that probably around 32 to 33,000. All right, I'm still favoring the downside. I still think this is a bear market rally. If we look at 2018-19, you had multiple 100% rallies off the lows of 3,500, even as much as a 200% rally, and ultimately we still went down and retested 3,500. So I'm not buying it yet. I know the masses would disagree with me. That's okay. That's been my life story with making big calls. The masses disagree. We obviously know the outcome of those.